This is East Asia Tonight.
Good evening, I'm Ateli Edwards. Tonight's top stories from East Asia. A new phase of the US-China trade war coming to life. Beijing hits back against Washington's new tariffs with a series of moves, including higher taxes on a whole range of American imports and a probe into Google. Well, security and economy on the agenda as Pakistan's President Asif Ali Zardari embarks on a 5-day visit to China. Now, he's also set to meet his Chinese counterpart, Xi Jinping. South Korea announces plans to overhaul its aviation safety system after 2 major incidents. A new committee of 20 experts will also drive improvements in airport safety. And OpenAI inks a deal with South Korea's Kakao, its second major alliance in the region this week, amid intensifying competition in the sector following the DeepSeek shock. Also in East Asia tonight, Malaysia's China-backed mega railway to link its east and west coasts was meant to boost local jobs and livelihoods, but can it deliver? China firing a return salvo in an escalating trade war between the world's 2 biggest economies. It has retaliated with higher tariffs on American imports, filed a complaint with the World Trade Organization, and launched a probe into Google after the U.S. imposed an additional 10% custom duties on Chinese goods. Now, China's Ministry of Commerce says that Washington's move seriously violated global trade rules and that Beijing is ready to work with other WTO members to address the challenges posed by, quote, unilateralism and trade protectionism. China has slapped up to 15% tariffs on select U.S. imports, which will begin next Monday. 2 U.S. firms have also been added to an unreliable entity list. Chinese authorities have also opened an investigation into Google for antitrust violations. Separately, China's Commerce Ministry said it is imposing export controls on some rare earth metals to safeguard national security interests. China controls much of the world's supply of rare earths that are critical for the clean energy transition. Right, and time to bring in Roland for a wrap of what else has happened so far. Roland?
Thanks, Oteli. With U.S. and the Chinese trade war heating up, Donald Trump may have renewed a trade war there, but he's offered reprieves to Mexico and Canada. Now, those tariffs were delayed for a month following last-minute talks between Mr. Trump and Canadian Prime Minister Justin Trudeau, as well as Mexican President Claudia Sheinbaum. Mexico agreed to send 10,000 troops to the border to stem the flow of illegal immigrants into the U.S., while the U.S. agreed to step up enforcement to stop the illegal traffic of firearms into Mexico. Negotiations will continue over the next month to settle other areas of dispute.
Y me dijo, bueno, pues, ¿cuánto tiempo? Le dije, bueno, vamos a ponerlo en pausa un mes. Y estoy segura que en este mes vamos a poder dar resultados, buenos resultados a su pueblo, buenos resultados al pueblo de México.
Canada has also agreed to tougher border measures to curb the crossing of migrants and illicit drugs. In a post on X, Prime Minister Trudeau said that Ottawa would send 10,000 frontline officers to better secure the border, list drug cartels as terrorists, and appoint a so-called fentanyl czar, as well as crack down on money laundering. President Trump said he was very pleased with the outcome. Despite an escalation in trade tensions, Chinese stocks listed in Hong Kong surged today. The Hang Seng China Enterprises Index closed up 3.5% at a fresh 3-month high. The Hang Seng Index, tech index that is, surging 5.1%. And Hong Kong's benchmark Hang Seng Index added 2.8. Investors loaded up on AI and EV shares while shrugging off news for a tit-for-tat US-China tariffs. Trump's announcement of that 10% tariff also coming as a relief compared to the threats of 60% higher taxes. Financial markets on the mainland will reopen tomorrow after the Chinese New Year holidays. For more insights, we're bringing in now Dr. Wang Huiyao. He is founder of the Center of China and Globalization, a former counselor of China's State Council. He joins us live from Bangkok. Dr. Wang, good to have you with us. How do you assess China's latest tit-for-tat response to the U.S. imposing an extra 10% tariff, given that such trade retaliations aren't new?
Well, thank you. So first of all, I think this new response from China was actually quite reserved. From the list you can see there's only 80 products, 80 products that Chinese government has, Minister of Commerce had levied some taxes on, some 10%, some 15%. But it's, compared with Trump, that he's going to levy on all Chinese products to U.S. This is really very symbolic and very good gesture, actually. I think also China has been getting used to the U.S. Trade war or trade tactics. For example, in the first term of the Trump administration, there's over 30% tariff has been added. China has already now trade more with Belt and Road countries now than trading with Western countries. So China has been preparing that for some time. But also further, I think also there's over 1,500 Chinese companies on entity list or sanction list by the U.S. China singled out 1 or 2, 3 companies is also a very symbolic response. So I think that President Trump said he wants to talk to Chinese leaders, as soon as possible. And, he also said, for the world that the two countries has to work together. There's no problem that cannot be solved. So I think there's still room to talk and communicate and dialogue, like China foreign spokesperson said. That we hope to have more communication dialogues so that I think, just like Canada, which also Prime Minister Trudeau has announced a lot of measures, but has been really worked out.
So, Dr. Wang, you do sound quite optimistic about this current situation between U.S. and China. We are expecting that upcoming phone call between the two presidents, Trump and Xi. But just tell us, with the latest tariff escalation, which isn't that much in your opinion, what is a realistic outcome for this conversation to happen?
Well, I think the real issue now for President Trump, he actually has a much larger second-term agenda. He probably going to consolidate North America, but also furthermore, he wants to do more business deals, and he wants to really make MAGA work. So if that is really the purpose, then he needs China, and China is the second largest economy and can be a best deal maker for U.S. to do that. We could continue the phase 1 or even that we left in the COVID. We could continue phase 2, phase 3. But also, Trump said that during the inaugural that he wants to be a president of peace. He wants to be a unifier. And I think that is really China wants to see peace and unify as well. So China can really support Trump on that for global peace, prosperity. So I think there's more issues on the agenda for China and U.S. to work together as two largest economies. They have a moral responsibility to make the world a much better place, rather than really divided and really attack on each other as a rivalry. So I think President Trump has a more probably realistic approach. He's more looking at the economic deals, more economic gains, and more really benefit for his country, which is understandable. So is for China. So I think there's many things can be talked about on both sides. But the key issue he was using this time was the fentanyl. But actually, Chinese Ministry of Public Security issued a statement yesterday saying that fentanyl was a regulated and a controlled product by the Ministry of Security. And that was not even done so by the Americans. So I think there's many things can be worked out by two countries if they can continue the dialogue that left during the Biden administration. So many things can be done.
Dr. Wang, you're saying that China wants common peace and prosperity. As a former counselor to China's State Council, you've had front row seat to high-level policy making. From that vantage point, how do you see Beijing internally assessing the risks and rewards of actually engaging the U.S. in a prolonged trade war?
Well, I think now this time, I would personally, I would think, Trump was not just aiming at China. He was levying 25% on Mexico and Canada. And I remember, Justin Trudeau made a huge news conference retaliate position from Canada, and then they sorted it out. So I think, China this time with some symbolic gesture like 80 product that the China going to levy some taxes on for some of the vehicles imported, but China imported very few vehicles from U.S. So I think this is a gesture that China has to respond. But I think there's room for negotiation. There's a room for discussion, and also President Trump said he wants to visit China during the first 100 days. I think that probably is even good. And also he's talking that he's going to talk to the Chinese leader pretty soon. We hope that is happening. And so I don't think this trade trade war or trade tariff that Trump is position. He used that more as a vehicle to really get people to the table to talk, to really discuss, to make deals, which is fine. China already made the first deal with President Trump during his first term. We could make a second deal or third deal, and then there's many things can be talked about as two largest economy. And on top of that, there's a global issue that we have to face in the war, Ukraine war, and Gaza, and the pandemic, and global debt, and AI. Many things that China and U.S. has to go. Even climate change, even U.S. is pulling out of that. China probably has to do more. So I don't see how the two largest economies can talk to each other and really sort out their differences, rather than autocracy versus a democracy, or have a different geopolitical alliance like AUKUS or Quad or Camp David of South Korea, Japan, all those things. Maybe more economic approach, business approach. Let's make a deal is probably a better approach, and that will really help both countries. And also, Trump wants to invest investment into the U.S. and Chinese companies are also available to invest. We have a Fuel Glass already invested $1 billion in the U.S. I mean, I see BYD and KATR, many others can also continue to invest. That's welcomed by President Trump. So there's many things we could do, like what Japanese did in the 80s and 90s to smooth their trade tensions by investing in the U.S. That could be a policy that Chinese company can take. I think there's many things can be talked about, from peace, prosperity to deals to investment. So let's see what can be talked about, and that's really we're looking at.
So I hear what you're saying, Dr. Wang, but we also know that, Mr. Trump, he can flip things around just as suddenly. And the truth of the matter is that foreign investment is slowing and there are concerns over domestic demand in China. So then do you think that Beijing can actually afford a trade war if it's prolonged?
Well, I don't think that the trade war will prolong. But for example, if President Trump said, he also said at Davos during his video conference there, he said that the U.S. has a trade deficit with the European Union for $350 billion US. He's going to raise taxes for the European Union as well. He's raising tariff for Mexico and Canada with 1 month's delay. So he's using that to do everything. But I think in the short run, that could gain maybe for U.S. President Trump, he sounds like a winner, but in the long run, going to hurt U.S. consumers, and also going to drive more countries to trade with China, actually, Latin American and the rest of the world. China is already trading more. Over 50% of Chinese foreign trade is trading with Belt and Road countries rather than G7 now. So you can see that if they're doing more trade war with all the rest of the world, the rest of the world will trade more with China, and 80% of the world will trade with China. So China is really preparing for that, and China has also a lot of new product available, EV cars and solar panels and batteries and whatever. So I think that this trade war is doing no good to anybody, but China is also prepared if worst come to the worst. So ideally, I would really think that China, U.S. and China should have to work together. After all, we're having 80 years of Bretton Woods system, which the system is still working, but we need to improve, enhance, and enlarge. And BRICS countries, China and ASEAN, and many global South countries have more say now, and I think we have to work together.
Dr. Wang, you said that if worse comes to worse, what if Trump refuses to back down? Does Beijing have a plan B?
Well, I think this time President Trump sounds more reasonable. For example, he invited President Xi to his inaugural. China sent Vice President Han Zheng there. He said if China and the U.S. works together, there's nothing in the world cannot be resolved or solved. So he's also trying to be friendly, trying to sort it out the TikTok issues. So we see quite a few good gestures. And he said he wants to talk to President Xi in the next few days, which is great. And so I think he also has more big pictures to balance American trade with the rest of the world, not just with China. So he's really taking American economic interest as his priority, which is fine, if he's going to do that. So he's taking a different approach than his first term, which is, making China the major rivalry. And this time, we will have to see what comes next. But I would think that he wants to be a president of the peace. He wants to be a president of a unifier, and he wants to be a president of make America great again. So then if he wants to do all those things, he needs China. Also, the two largest economies has to work together. But as I said, China is also prepared if the trade war deepens or getting serious, as China is already trading more with Belt and Road countries than with G7 now. 50%, over 50% of China trade with Belt and Road countries. So I think with China's infrastructure, the synergy, the talent, the best supply chain center in the world, China is going to continue to be a magnet for global trade.
Well, Dr. Wang, we're certainly looking forward to that conversation between President Xi and Donald Trump, and we'll find out more what they have to talk about. In the meantime, it's been great having you on East Asia Tonight, Dr. Wang Huiyao, founder of the Center for China and Globalization and former counselor of China's State Council. And thanks to Roland as well. We'll be speaking to you in a short while. Now, U.S. Secretary of State Marco Rubio, in the meantime, is optimistic that Panama will address American concerns over alleged Chinese influence in the Panama Canal. Mr. Rubio visited Panama yesterday, marking first overseas trip as America's top diplomat. Tensions certainly ran high after President Donald Trump threatened to seize the vital waterway. But Mr. Rubio took a more diplomatic approach, saying that the issue was a delicate one for Panama and praising its efforts. For one, Mr. Rubio welcomed President José Raúl Mulino's decision to let Panama's participation in China's Belt and Road Initiative lapse. Mr. Rubio called it a great step forward for a free Panama Canal. China has called Panama's intent to leave the BRI regrettable. The country was the first in Latin America to officially endorse President Xi Jinping's global infrastructure plan back in 2017. Well, Mr. Trump says he will hold more talks with Panama on Friday.
We either want it back, or we're going to get something very strong, or we're going to take it back. And China will be dealt with. And we didn't give that to China, we gave it to Panama. We shouldn't have given it to Panama, but Panama, as you know, has violated the agreement, totally violated the agreement.
Well, we're going to go for a short break now, but coming up next on East Asia Tonight, a look at market reaction out of the region as investors scramble to keep up with the tit-for-tat escalation of a global trade war between the world's two biggest economies. Plus, Japanese video game giant Nintendo posts a profit miss and cuts its full-year sales forecast for the aging Switch console again. Hello again. Good to have your company on East Asia Tonight. It is time again for more business news with Roland Lim. And Roland, I believe there's another major collaboration for OpenAI in East Asia. What's that all about?
You heard right. ChatGPT owner says it'll develop AI products for South Korea with South Korean tech giant Kakao. Just days after announcing a partnership with Japan's SoftBank group, that's as the US firm seeks new alliances after Chinese rival DeepSeek shook the global AI industry. The new partnership will allow Kakao to have the South Korean firm use ChatGPT for its new artificial intelligence services. Now, Kakao is the first company in the country to do so. It joins a global alliance led by the US AI firm amid intensifying competition in the global market. Now, beyond the tech collaboration, the two firms have also agreed to pursue joint product development. The announcement comes as OpenAI and CEO Sam Altman is visiting Seoul for a company-hosted event for local AI startups and developers. Mr. Altman met with SK Group chairman as well as SK hynix CEO in Seoul today to discuss collaboration on AI memory chips. He's also expected to meet up with Samsung Electronics chairman Lee Jae-yong later today. Japanese gaming giant Nintendo has slashed its full-year sales forecast after revenue plummeted over the holiday period as its aging console loses momentum ahead of the launch of a successor device this year. Net profits nearly halved from a year earlier to about 47% to $1.6 billion in the April to December period last year. Revenue for the 9 months period declined more than 31%. Nintendo now expects to sell some 11 million units of its new console for the financial year ending March. The Kyoto-based company teased the release of Switch 2 back in January and has set the date for its full unveiling in early April. Nintendo has been grappling with falling demand for its iconic Switch console, which is now more than 7 years old. The Switch has sold more than 1.3 billion copies of software and more than 150 million units of the beloved hybrid handheld hardware. US President Trump has signed an executive order to create a sovereign wealth fund within the next year. He's also suggested it could buy the short video app TikTok.
It's a very exciting event. We're going to have a sovereign wealth fund, which we've never had. We have a lot of things that create wealth, and you're seeing that over the last 2 weeks. I think we've created more wealth. Other people have created de-wealth, the people, my predecessors. We're creating a lot of wealth.
Mr. Trump offered little detail on how such a wealth fund would work in the U.S. Now, these funds typically rely on a country's budget surplus to make investments, but the U.S. operates at a deficit, and its creation would also likely require approval from Congress.
Within the next 12 months, we are going to monetize the asset side of the U.S. balance sheet for the American people. We are going to put the assets to work, and I think it's going to be very exciting. We're going to study best practices as done around the world. It'll be a combination of liquid assets, assets that we have in this country as we work to bring them out for the American people.
Mr. Trump also suggested that the wealth fund could buy social media app TikTok, whose fate has been uncertain since a law requiring its Chinese owner, ByteDance, to either sell it or face a ban in the U.S. The Biden administration reportedly also considered setting up such a wealth fund earlier. There are over some 90 such funds across the world, managing over $8 trillion in assets, and that's according to the International Forum of Sovereign Wealth Fund. Let's take a look at the rest of the markets in the region in the wake of Beijing's retaliatory move after U.S. President Trump suspended his threat of steep tariffs on Mexico and Canada. Japan's Nikkei 225 rose as much as 1.8% today, but paired off some of those gains to close 0.7% in the green. The South Korean benchmark also closing up with gains of 1.13%. And the Taiwan weighted index is up 0.4% for the day. South Korea's leading semiconductor firms rebounding from yesterday's steep losses on tentative tariff optimism. Samsung Electronics added 3.3% today after falling almost 3% yesterday. And SK hynix recovering from a 4% plunge the previous session. Major rebound as well for shares of Japanese automakers as concerns about U.S. tariffs eased. It's a sharp contrast from yesterday's losing session, as many of them have operations in Mexico where they manufacture the cars that are then exported to the U.S. Toyota shares up 1.7% after a 2.9% bounce yesterday. Honda adding 1% and Nissan Motor is up 0.74%. And amid the escalating trade uncertainties, investors are recalibrating the odds of a sharp global slowdown, an inflation comeback, as well as a pause to interest rate cuts. The US dollar regaining some ground against its Asian peers. The Korean won has strengthened somewhat by 0.16%. So far, it's gained 0.6% against the dollar this year. the Chinese currency relatively unchanged to the dollar, 7251 to 1 US. And the yen is also stronger against the dollar by 0.3%. And that'll do it for business. Otele.
Thanks so very much, Roland. Well, time now for another break, but coming up on East Asia tonight, China invites Pakistan's president for a state visit with an eye on safeguarding Beijing's investments. Our correspondent Hira Mustafa joins us with all the details. South Korea announces plans to overhaul its aviation safety system after two major incidents. A new committee of 20 experts will also drive improvements in airport safety. Security and economy on the agenda as Pakistan's President Asif Ali Zardari embarks on a 5-day visit to China. He's also set to meet his Chinese counterpart Xi Jinping. And Beijing hits back against Washington's new tariffs with a series of moves, including higher taxes on a range of American imports and a probe into Google. And for more on this, we are now joined by CNA's Hong Kong correspondent, May Wong. So, May, I know you've been busy speaking with some economists earlier. What exactly are they saying about China's latest moves?
Well, the economists are saying that China has been preparing for this. So this is something that China wants to show and prove a point that it has a response and it's not just going to sit quiet, but they're taking a very measured response at that and not to escalate the trade tensions. For example, you see the imposition of Chinese tariffs on the U.S. goods, 15% on coal, for example. Well, that is not a very substantial import from the U.S. into China. For example, in 2023, the U.S. only exported about 7% of coal in terms of their total export to China, compared to India. U.S. imported, or rather U.S. exported about 25% of coal to India. So that is going to create a little bit of a dent in terms of creating the inflationary pressure that was intended on the U.S. And also remember here that China really wants to seek, a halfway negotiation with the U.S. and looking to see how the U.S. would be able to respond and meet the U.S. midway. So, for example, economists are saying that China might likely speak to the U.S. in terms of offering to boost investments in the U.S. and also perhaps a move on the positive development in terms of the TikTok sales to the U.S. So all of these are a whole package in terms of dealing with the U.S. when it comes to additional tariffs.
But, the tariffs, though, I mean, how do you think the Chinese economy will be affected in the near to medium term?
Well, analysts are saying that China's economy will still remain stable and China will likely keep to its growth target of 5% this year as they did last year and managed to achieve it at 5% last year as well. So looking ahead in terms of what China intends to do, well, China will likely recalibrate its fiscal stimulus package. It'll also think about how much more money it wants to spend, in which sectors it wants to spend it in, and also, more importantly, they will probably come up with more subsidies to boost domestic consumption, domestic spending. So China is really going to be on a path to accelerate its self-sufficiency and self-reliant model. All of these will surely help to go against the U.S. Additional tariffs that will be imposed on them. In addition to that, it's also stated, and economists are also of the view that you see China moving elsewhere in terms of expanding its scope to look at other new markets for import as well as exports. Chinese companies have already moved on to politically neutral grounds to set up manufacturing bases in the likes of Southeast Asian nations like Malaysia, Indonesia, as well as Thailand. So all of these are just ways to kind of confront and also to figure out how to move forward from this trade war. And more importantly as well, last point is that what we need to look out for, economists are saying that, number one, will U.S. impose even more tariffs onto China, or will 10% be at that? And also the other thing is talks between President Donald Trump as well as Chinese President Xi Jinping, how that is going to play out and what kind of agreement will those two come to?
Yeah, we're keeping our eyes peeled on that one. Thanks so very much for that report. CNA's May Wong, live from Hong Kong. Well, earlier we also spoke with Gary Ng, his senior economist at Natixis, on this unfolding tariff war between the US and China. And he tells us that the significance of Beijing's retaliatory moves.
I think China is pretty much trying to engineer the same magnitude of the retaliation versus what the US has actually done on China. But one of the biggest differences versus 2018 is really about China opt for a more targeting approach towards different products. We do see this greater focus on energy and machinery, which are actually the sectors that the US export more to China. And beyond the tariff approach, we also see the greater usage of export control and the restriction of market access of certain American firms. And these are actually some of the new areas that China has been trying to develop in terms of a tool. And this time around, it's really being used. So I think it is pretty much a preparation for the further negotiation with the US.
Now, Gary, what are the potential long-term effects do you see with these tit-for-tat tariffs? Specifically, what knock-on effects can consumers expect to feel here?
I think the biggest impact will really be the decoupling between the trade flows of the US and China. But of course, the impact on inflation will still be a bit, it may vary, and we still need to determine that because we all know that in China, it is pretty much undergoing very weak demand story. So the price pressure is not really too big. So for now, the measures won't really have a very material impact on China-related products. The pressure may be a bit higher on the US side because of there's really like a wide range of tariff targeting in almost all the products, and especially the US imported a lot of basic goods from China. So I think this inflation divergence story can actually be quite different, which is also reflected in the policy approach the two countries has chosen. But for the rest of the world, if we really start to see more tariff because we are not so sure whether this 10% is really the end of the whole negotiation process, then I think the prices globally will still be more elevated compared to what people expect before all this tariff happens.
Well, as you say, the 10%, you don't know how long that will be. The last US-China trade spat lasted years. How do you expect this to play out? How do you see some of the potential scenarios here?
I think compared to what we see in Mexico and Canada, there's clearly more common ground with the US versus with China, because there's obviously a lot of problems except the fentanyl. There's also other things on technology. This huge trade surplus that China has. It's not something that China and the US can actually solve overnight. Of course, it's hard to really attach a probability to such a deal. But the problem here is that if a tariff is really being used by the US as a tool, then whether like that deal that we may actually see maybe within 1 year time will be the final one, because there could be further demand from the US, and there could be other sort of conflict between the two countries. So I think increasingly we are pretty much living in a world with such uncertainties that tariff will be weaponized in that way.
Pakistani President Asif Ali Zardari is embarking on a 5-day visit to China at the invitation of President Xi Jinping. Well, the trip comes amid growing tensions between the two so-called Iron Brothers over the security of Chinese interests in Pakistan. Beijing is a key ally and investor, pledging more than $65 billion to the China-Pakistan Economic Corridor as part of its ambitious Belt and Road Initiative. But in recent years, separatist groups have repeatedly targeted Chinese nationals and projects in the country. Back in October, a suicide blast in Karachi killed 2 Chinese nationals, while in March, another attack in the north of Pakistan left 5 Chinese workers dead. Now, Beijing's ambassador in Islamabad last year called the violence unacceptable, saying that it poses a constraint on Beijing's investment projects. Now, he also urged authorities to take action against those responsible. And for more, we are joined now by our correspondent, Hira Mustafa, in Islamabad. Hira, this visit taking place at the invitation of the Chinese President Xi Jinping, what can we expect out of these high-level meetings?
Well, Pakistan and China are often referred as ironclad brothers, but this relationship between two countries is going through some tough time in recent days as security remains a point of contention between the two countries. And this visit of President Zardari to China comes at a time when Islamabad is grappling with security challenges. So many of the experts here in Islamabad believe that security is going to be the top agenda, given the fact that Pakistan's western borders are facing immense security threat, especially in the provinces that are home to significant Chinese investments. So therefore, security is going to be the top agenda that would be discussed between the leadership of Pakistan and China, as China has at multiple occasions reiterated and has urged Pakistani authorities to ramp up their security efforts in order to provide security cover to the Chinese nationals who are working on different China-Pakistan economic corridor projects across the country due to the growing targets of militants on the Chinese nationals. So security is something that would be discussed in these high-level meetings. Apart from that, number of MOUs are likely to be signed between Pakistan and China as both Islamabad and China are keen to expedite the launch of China-Pakistan economic corridor phase 2. So Pakistan is eyeing also on the Chinese investments to turn around its ailing economy, as Pakistan is not only having security challenges at hand, but is also dealing with economic challenges. So talks will also be focusing on economic collaboration apart from security talks.
Now, speaking of security situation, you've been on the ground covering the attacks, right? Help us understand this. Why is security situation in some parts of Pakistan so challenging for Islamabad? And can anything be done about it?
Well, security is a challenge for Pakistan at the moment, and since the fall of Kabul in 2021, Pakistan's western borders are facing intense security threats from the militant groups, which Pakistani authorities blames are operating from the side of Kabul and are targeting the China-Pakistan economic corridor investments in order to drive a wedge between the relationship of China and Pakistan. Due to this escalating situation, China has reiterated and has categorically stated to the Pakistani authorities that they need to ramp up their security efforts in order to protect the Chinese investments in the country, as China has funded Gawada port in Pakistan's southwestern Balochistan province. So Balochistan province is home to significant Chinese investments, and in order to move forward with these CPEC projects, China has demanded Pakistani authorities to beef up their security efforts and to put their house in order. In view of this troubling security situation, Pakistan has raised a security force to provide security cover to Chinese nationals who are working on these projects. Also, Chinese nationals are advised by the authorities to move around in bulletproof vehicles, and police is going to escort them. Also, the areas where Chinese are working on different CPEC projects, they are being cut off from the local towns amid the heightened security concerns. So experts here in Islamabad believe that terrorism is something on which Pakistan alone cannot fight with the militant groups. So it needs both Pakistan and China needs to adopt a pragmatic approach in order to move forward with the CPEC investments in the country.
Well, thanks so very much for that report. Hira Mustafa speaking to us live from Islamabad. Next, South Korea's spy agency says that North Korean troops helping Russia in its war against Ukraine have not taken part in combat on the front line in Kursk since mid-January. The National Intelligence Agency suggests one reason for this could be heavy casualties, but says it's still monitoring the situation. Ukrainian President Volodymyr Zelensky says that Pyongyang could send 20 to 25,000 additional troops to Russia, citing information from various sources, amid reports that soldiers have been taken off the front lines due to combat injuries. Western, South Korean and Ukrainian intelligence agencies say that Pyongyang has so far deployed more than 10,000 troops to support Russian forces in its war. Of those, 300 are believed to have been killed, with some 2,700 others wounded. Neither Pyongyang nor Moscow have confirmed the deployment. Reports also say that North Korean soldiers captured by Ukraine claim that they were told they were participating in a military training exercises, not a war. Well, South Korea says that it plans to rebuild its aviation safety system from scratch after two major incidents in the past 2 months. The Transport Ministry says they want to restore trust and pledged that the government will make this a top priority. They have launched a new committee to improve air travel in the country. The group will include private sector experts. It will also look at issues including maintenance and aircraft utilization rates at budget airlines, as well as airport construction and operation. South Korea's deadliest air disaster happened in December when a Jeju air flight crashed at Muan International Airport, killing all but 2 on board. Last week, a plane was engulfed in flames at Busan's International Airport just before takeoff. All on board were evacuated safely. While staying in South Korea, President Yoon Suk-yeol has once again denied allegations that he instructed military commanders to drag lawmakers out of parliament during his imposition of martial law in December. During the 5th hearing of his impeachment trial, Mr. Yoon said that there was no point debating whether he gave those orders as, quote, nothing had happened. 2 former military commanders and an ex-spy agency official testified during the hearing. According to Mr. Yoon's charge sheet, he attempted to cripple the country's media outlets by cutting off their power and water supply on the 3rd of December. President Yoon has denied that his declaration of martial law was unconstitutional and has requested for a court to cancel his arrest. If his impeachment is upheld, Mr. Yoon will be removed from office, and this will trigger a snap election within 60 days. Japanese Prime Minister Shigeru Ishiba has ordered his officials to ease rising food prices. Among the measures, the unprecedented release of government stockpiled rice to bring down the cost of the grain. Japan's economy minister says that citizens are suffering greatly and feeling the pain, noting that the cost of locally grown rice in particular has soared unexpectedly. Rice prices have jumped 55% from the previous year to more than $150 per 60 kilograms. The stockpile release is expected to bring the cost down, but farm cooperatives will have to return the equivalent amount to the government within a year's time. The sale price and the timing of the release have yet to be decided. It was also reported last year that the extreme summer heat had shrunk the season's harvest. Rice flew off the shelves as residents hoarded supplies and caused prices to surge. Tourism, which reached all-time highs, was also blamed for the shortage. Our break is up next, but coming up on East Asia tonight. Has Malaysia's construction of its East Coast rail link created jobs for locals? And will the mega project push the country into a Chinese debt trap? Well, Malaysia's building a train line under China's Belt and Road Initiative to connect its peninsular East Coast states with the more developed West. Now, the East Coast rail link was meant to boost local jobs, but so far, worker numbers are falling short of earlier estimates. Well, the project has drawn an influx of foreign workers from China and Bangladesh. There are also fears that the railway cannot generate enough revenue needed to pay back the billion-dollar loan from China. Well, CNA Digital has more on this mega project.
Senanglah jimatkan masa, jimatkan wang lagi untuk orang-orang yang miskin, dia boleh pakai naik kereta yang murah cepat sikit lah.
Supaya nak lebih cepat lah dengan orang saya tak kata 2 tahun lagi kan. Mudah-mudahan saya sempat lah. Kemudian saya pertama nak naik.
And for more on this story, we have with us CNA's Akil Haziq Mahmood joining us from Kuala Lumpur. Akil, so this railway link actually promised tens of thousands of jobs when it was first pitched, but the numbers have fallen short. So what exactly has been delivered so far?
Well, Telly, the ECRL owner Malaysia Rail Link, MRL, told me last September that there are some 23,000 people working to build this railway, which is not quite the 80,000 direct and indirect jobs that were expected to be created initially. And furthermore, of the 23,000 people, only 26% are Malaysians, short of the 70% that MRL said was expected to go to locals. So I think it is fair to say that the construction of the ECRL has been kind of a magnet for more foreign low-skilled labor. With that said, though, the Malaysian government has pledged that 80% of the ECRL's operational and maintenance workforce will go to locals. So we're talking about station staff, train drivers, maintenance crew. That is something that we should keep an eye on, as the government has been keen to reassure that this Beijing-backed mega project is something that will benefit locals in terms of jobs as well.
So aside from the issue of, employing locals, there's also the concern about its future profitability. Akil, is Malaysia in danger of falling into a Chinese debt trap, which is a common criticism of some of its Belt and Road Initiative projects?
It's an important question. The main thing we should take note of right now is that Malaysia and China have agreed to set up a joint venture operating company operating the ECRL. They will each bear 50% of the risk if the ECRL operates at a loss. This eases some of those debt trap concerns, as both parties will be equally responsible for any potential operational deficits. Yes, there have been questions about the lack of transparency in the terms of the Chinese loan given to build the ECRL. But another thing to understand is that Malaysia in 2023 passed its own fiscal responsibility law, which means that the government will be held accountable if it starts spending disproportionately to service the ECRL loan. And analysts tell me that these factors put Malaysia in a good position to resist or to not fall into a Chinese debt trap.
All right, good to know. Thanks so very much for that report. Akil Haziq Mahmood there speaking to us from Kuala Lumpur. And that's all the time we have for you on East Asia tonight. Thank you so much for your company. If you need the headlines, you can check them out anytime at cna.asia, on Facebook and YouTube as well. Thanks for watching.